Hi guys, it's Aussie Trader here, and I've just got a short video to share with you that's just going to depict for you how I calculate position sizing and basically manage risk when I'm taking new positions and for overall portfolio management. So I'm just going to share a new entry I've got lined up in SOL, and I've got the chart here showing for you, and then I'm going to move to a spreadsheet and just share with you how I calculate my position sizing and share the methodology I'm using for my risk management. So looking at the chart of SOL, shaping up nicely, and I've posted it in one of the threads in the forum. And I'm just showing here the ascending support that SOL has in place. Looks very strong and nice, reacting well off the ascending support here and looking to break out to new highs just in this area here. And that's my reasoning for entry. The breakout here, and I would expect SOL to continue on in this direction. A lot of solars are shaping up nicely right now. So my expectation is to enter somewhere in the 1850 to 19 zone, and I'm going to enter this position with what's called a fixed stop below it, and the fixed stop will take me out of the position if it goes against me, basically at a predetermined price. Using those two pieces of information, the entry price and the fixed stop, I'm able to calculate my position size using a methodology called fixed risk variable position size. Fixed risk basically means that my risk is fixed as a percentage of my overall portfolio value, and variable position size basically means the position size will vary according to what type of share I'm buying based on the volatility, because I'm going to be using average true range to calculate the volatility. So I will risk the same percentage of my portfolio in each trade for this particular portfolio, but the position size that will occur will vary because of the calculation I'll show you. So I'm expecting to enter in this zone, and my fixed stop will be down here, probably somewhere, I'll just take the low of this particular candle here as my sort of basis point, which probably is in the, I can't see it because I've got the screen up right, but it's around about 1590, something of that nature. Okay, so my entry around about 1880, I'll say, and my fixed stop around about 1590. All right. So I'll just move to a spreadsheet I've already got set up that does the money management for me and position sizing for me. And it's a nice, easy spreadsheet to use, utilizing average true range. So this particular portfolio, here's the capital or the portfolio value currently put in here. And I select the percentage risk per trade expressed as a percentage of my portfolio. And right now, on this particular portfolio, it's going to be in the order of 0.7%. Okay. Whoops, daisy. Okay, just a bit of a typo error there. Okay, so 0.7% of that portfolio I'm prepared to risk with this particular trade. That means if the trade goes against me, I'm prepared to take a loss of $1,400. That's basically what the calculation is doing for me there. Okay. My buy price, okay, if I just flick back to the SOL chart because I've got a short-term memory issue, it's going to be about $18.80, let's say, just for the purposes of this example. $18.80. Okay, my brokerage, I know, is $9.99 with TD Ameritrade. That's who I'm trading with in this particular portfolio. And then I come down here to bring into play my stop value, my fixed stop that I'm going to put in. And what I need to put in is the average true range value, which I have set up on the chart. So I'm using average true range as part of this calculation. And average true range is expressed down here for me. I'm using a 20-day average true range, just to take 20 days is the sample size of past 20 days trading. And I can see it's 1.334. Okay. So my ATR for SOL is 1.334. That basically means that SOL, based on the past 20 days of trading, can move up or down $1.33, and that would be considered an average movement. Okay. All right, so that's in there. That automatically tells me that when I go through this calculation, based on where the stop will be, what I have to do is put a multiplier in on that number. Okay. So and then it will calculate where my stop will be, and I will use that to position it where I need to. So for instance, if I just put 1 in here, what that's doing is multiplying the ATR 1.33 by 1, i.e. it's just using 1.33, and then subtracting it from my proposed entry price, and then that will be calculating where to put the stop here, 17.46, which is $1.33 away from my expected buy price. Okay, there's my loss, 1400 if I were to do that and the price goes against me and finishes down here. And up here it's telling me to buy 1034 units at 1880. The total cost of that transaction is 19,400, etc. You can see, and that would be my position size if my stop based on 1 multiplying the ATR by 1 sitting at 1746. Okay, now I wouldn't really want to enter position with a multiple ATR of 1 because, as I said, average true range is just showing you how much price is, how volatile the shares are basically. And 17 odd is up here, so it's far too close for me, and I want it to be down here somewhere. Probably I'll say 16. I'll just bring it below the round number, 1590. Okay, so I just need to play with this number here to bring my ATR stop down to the level I need it to be. So let's move it up to 2. Okay, so you can see that's getting it nearer to where I need to be, probably 2.1, and I'm just about in the realm of the area I need to be. Here will do, 1590 with 2.2 times the ATR. And you can see what that's done to my position sizing. Okay, because I'm position sizing based on the volatility of the shares relative to how much I'm prepared to risk in the trade. So if I have my stop at 1593 or thereabouts, all right, my initial fixed stop, this calculation is telling me buying 481 shares, okay, at approximately 1880 being my entry price, and then my position size is $9,000. Okay, so using this methodology for this particular portfolio that I'm running, I always use the same approach. Okay, over here I'm always expressing my risk per trade as a percentage of my total portfolio value, and I'll never go above 2% risk in terms of what I'm prepared to risk as a total of my portfolio in any one trade. This calculation really does enable you to do one thing really well, and that's cut your losers quickly and keep them exactly at the maximum risk you're prepared to take. Also have in here an estimated sell, so I can put in here the price that I would estimate to be selling Sol. I don't have that in mind at the moment because I'm thinking this is quite a longer term endeavor, and I would hope that it would give it a lot of movement. So, but just for the purposes of this demo, I'll put $50 in here. All right, put that in as my estimated sell. You can see it calculates my risk reward, gives me my percentage return, and the profit I would make on that particular trade if that was to be the outcome of it. Okay, so that's for this particular portfolio, how I calculate position sizing and how I manage